Hello friends, this is Pinky and you are welcome on my channel Tradingsacademy. Hope you all are good. Today we will learn about types of shares. Broadly there are two types of shares, preference shares and equity shares. So first let us talk about preference shares. These are shares which have priority or preference over ordinary shares. What are these ordinary shares? These are equity shares. Preference shares always get a fixed rate of dividend, while equity shareholders don't. Their rate of dividend varies always, and preference shareholders are always get preference over repayment. Repayment when at the time of liquidation, winding up, collapse, merger kind of situations of a company. They are always settled before equities, but after debts. They are also owners of the company as the equity shareholders are, but they don't get voting rights, but equity shareholders get. They also get voting rights, but in some certain conditions which directly affects their interest, like in the case of reduction in capital or winding up of the company. Correct. These companies can also list these preference shares on stock exchanges. In India there are two stock exchanges, NSE and BSE, National Stock Exchange and Bombay Stock Exchange. But it is not mandatory for any company to list these shares on stock exchanges. But from where you can buy these shares? If these are not listed on stock exchanges, then you can buy it from private transaction. But private transaction is much costlier. This might be starts from 10 lakh of capitalization. But if these are listed on NSE or BSE, the cost will be as low as rupees 10. Okay, I think this is clear to you. Now preference shares have certain downsides too. What downsides? Like they don't have right to decide on company's course of actions. Why? Because they don't have voting right. They have no voting right. Okay, they also don't claim bonus shares because they don't have right to claim bonus shares. Hope this is all clear to you. Now what are the types of preference shares? There are commonly 8 types of preference shares: cumulative, non-cumulative, redeemable, non-redeemable, convertible, non-convertible, participating and non-participating. I'll come with a separate video on these also, these types of shares. Hope this is all clear to you now about preference shares. But still if you have any doubt or query, then please write down under comment section. We will revert you there. Now let us move to next topic, that is equity shares. What is an equity share? Equity shares are the ordinary shares, as I have told you in our previous slide. These are not redeemable. Equity shareholders are the real owners of any company. Why? Because they have voting rights. They have voting rights in the matters like which directly influences the matters of company, like appointment of directors or auditors, or removal of directors or auditors. They do not get fixed rate of dividend. Their dividend share varies always. They might get or sometimes they may not. They are always paid at the last after paying off all liabilities and payments. But they have right to claim on bonus shares. Okay. Hope this is all clear to you. Equity shares are riskier assets. These are riskier because you can't claim on dividend always, and interest varies. But they are more flexible. You can transfer them or you can trade it openly on stock market. Hope this is also clear to you. Now let us talk about difference between preference shares and equity shares, so that it will be more clear to you and it will also be like a revision for you. Difference between preference shares and equity shares. First, what we have discussed, dividend payout. Dividend for preference shares, they get preference, right, over equity shareholders, but they are always paid residual, means the balance. If anything remains after payment of every liabilities, then they will get paid. What is rate of dividend? Rate of dividend is also fixed. For whom? Preference shares. But for equity shareholders it varies. And the third is bonus share. Preference shareholders can claim it or not? No, they cannot claim, but equity shareholders can claim this. Fourth, what we have discussed, capital repayment, right? For repayment, they are always paid before equity shareholders, but after debts, correct? But for equity shareholders, they are always paid last. Role of these shareholders on management. In management, they are not allowed. Why? Because they don't have voting right, and they are allowed because they have voting right, correct? Now what is redemption? They are not redeemable, non-redeemable, and they can be redeemed. And what are the types of investors? Who are the investors who invest in preference shares or equity shares? These are those shareholders who has tolerance. But these are shareholders who are not tolerant, who are risk appetite. Risk appetite. And what we had discussed, arrears of dividend, means if any part of dividend is paid on any year and rest is not paid, then what will happen? Preference shareholders will get remaining. They will get cumulative dividend. But they will not receive. Next, investment denomination. Investment denomination, as I have told you, that preference shareholders have highest denomination, but they have lower denomination. I told you rupees 10 lakh minimum, right? The next is burden on company. Yes, they have burden on company. They must have to be paid, but they are optional. If company will have any remaining or residual, then company will pay to equity shareholders, otherwise they are not burden on the company. And liquidation. What is difference at liquidation? They are not liquid because you can't sell them, only you can sell them to only company, but they are highly liquid. You can easily trade them on stock exchanges. Okay, hope this is clear to you. Now there are some similarities also between these two shares. Both are defined under section 85 of Indian Company Act and both are owned by company, own capital of the company. So guys, I hope all clear to you till now. Now anyone can invest money in equity shares and or preference shares easily. But for this, one should know, or the better word that I would say is, one should fit in mind few things before investing money. First, you should have complete knowledge. One should have complete knowledge about the stock market. Otherwise, there are a lot of chances that you may suffer loss. Second, one thing you must remember while making an investment is purchase the shares or stocks when the market is down, means the price is low, and buy and sell them when the market is upside, because at that time prices are relatively higher. Okay, do not blindly believe on any good advice or follow others, because some investments may give you high returns but they are riskiest ones. So think twice before you invest anywhere in the stock market. This is the thumb rule. Next, try to purchase an IPO. I will come on this also. I will come with a video on this topic. Next, investigate before you invest your money in any stocks, as there are chances of money loss. Hope this video is informational to you and you enjoyed and liked the video. Please like, share and subscribe my channel. If you have any suggestions or queries, then please write down on comment box. We'll check them and revert you there. I'll come with more videos on stock market. Thanks.